So today we're going to be talking about one of the attributes you want to make sure the lender you're working with has if you're looking at buying a house towards the end of 2024 and towards the beginning of 2025. Okay, so first of all, if you're new to the channel, I'm a mortgage lender licensed in 48 states. So everywhere but Rhode Island and Utah, just call me. Seriously, like sometimes people are like, I didn't realize I could call you and I'm working with this horrible person who I hate. And I'm like, why did we even do this? My number, we have a new team number so that people can respond to you quicker. And by people, I mean myself, Linda, Sandy, or Alyssa. 786-933-2077. So once again, 786-933-2077. Okay, shameless pitch over, but literally, it's because I get the text messages where someone's like, I've watched you for 4 years, Jen. I'm in this horrible situation. And I'm always like, how did you call them? Why did this happen? Okay, ability to renegotiate. I can't stress it enough. So let's talk about what that means and why it matters more than ever right now. So we are now in what's known as a declining rate market. What that means is that rates are expected to go down. And in a declining rate market, as a buyer, the safest you can be is if you're working with a lender that has the ability to renegotiate the rate, okay? So what does that mean? It's simple. When you're looking at buying a house, let's say you're in contract, because right now, am I doing lock-in shops, which mean I lock your rate while you shop? No, I do those in a market when the rates are going up. So in 2022, lock-in shops made sense because rates were going up. Now that we're in 2024, tail end, we're seeing rates coming down. This is when you look at locking when you're in contract, but you also want that renegotiation option. Here's why. So first of all, if you're working with a lender and let's say you get into contract and they go, well, you know, rates seem to be going down. Let's just lock a couple days before close. That is incredibly risky because even in a declining rate market, there's a lot of volatility. So for instance, what we've seen a good amount of is we'll see a couple days where rates are like amazing and then they'll pop back up. And you're like, well, wait, if we're in a declining rate market, why are they popping up? Because of volatility. Like everything right now is sentiment. You know, the market could decide that they think Jerome Powell's not going to lower rates. You could get data in that says the economy is stronger. You know, you could get data that says the economy is weaker. Jerome Powell could sneeze. There's a lot of variables going on. So the concept of locking right before close, personally, do I like it? No, I don't. Like, would I do it if it was me? No. Because I've seen how much I've seen how much rates can move based on sentiment. And I don't want to screw around with 1/4 or 0.5%. So when I'm looking at locking, I'm usually looking at, okay, day one, let's say you're my client. Day one, we're going to say, hey, this is where we are with rates. Is this, you know, where is it in relation to where we've been in the last few weeks? And if it's good, I'm going to be like, hey, you know, let's lock. We share our rate sheets. We're always happy to. And it's for a multitude of reasons. Number one, I think transparency is important. But number two, if we renegotiate, I want you to understand how a rate sheet works, okay? And here's the thing. So I have the ability with most of the loan products that I do, right? As we know, I do a lot of VA, right? VA, Fannie Mae, Freddie Mac. So that's your conventional, that's your VA, and then FHA, right? With all of those products, we have the ability to renegotiate. So what that means is that let's say we lock day one because you're like, yeah, I like that rate. That's good. I don't want to take any risk. I want to sleep at night. That's my worst case scenario, right? Okay. If rates drop, I have the ability to renegotiate you once. So for instance, with most of the loan programs I have, the interest rate has to drop at least 1/4%, and then there's a 0.375 fee to renegotiate, okay? $100,000 loan, that's $375. Okay. And the reason I bring up the fee is because, and the fact that I share the rate sheets, is there's a lot of lenders that say, oh, we renegotiate for free, but they don't. They're just not showing you that they're bundling it into the rate sheet, Okay. And what that means is you could go, let's say for instance, the rate was 6.25 VA. We're just going to use VA as an example. So the rate was 6.25. Now it's 5.875, right? But you could have 5.75 if you paid the fee. But if you do the higher rate, you don't have to pay the fee. People aren't explaining this to you, and you're the one that ultimately is making the decision. So I always like to show the rate sheets, if we're in that situation, just to say, hey, look, here's where we are. These are your options, okay? So if you're talking with a lender, number one, you want to know when they're going to lock you. Because if they say, oh, we don't really lock until 10 days before close, you don't know what you're going to get. You don't know if they're going to be competitive. You could have a loan summary, which looks real good, but 10 days before close, you're a hostage. Your ability to switch lenders is gone at that point, unless the seller will let the close go on longer, okay? So you want to make sure that number one, you're working with a lender that is willing to lock you day one so that you know your worst case, you have a sense of security, right? Number two, you want to know that they have the renegotiation ability, because in a declining market, if there's a great day, you want to take advantage of it. Recently, with my team, we had a great day. CJ on my team ran 45. He ran 45 sets to see if we could renegotiate, and we reached out to the clients, and some of them wanted to because they were going to close in a couple days. So they're like, yeah, I want to do that, whereas others had longer closes and they wanted to gamble. But the key is, are you working with a lender that will do that? And are they comfortable doing it? Do they do it a lot? I lead with the fact that I have the ability to renegotiate because I think it's so important. So if you're having to drag out from the lender, hey, can you renegotiate? What are the terms? And they seem unsure, what are the odds that they will ever actually do it? Because that's the thing. It's like, look, I work at a company where we have the same policy for rate renegotiations, but do I think all of the loan officers are actively on top of it as much as my team? No. Do I think there's some that are? Absolutely. But do I think there's some that don't even know how to do a rate renegotiation? Yes. And as a buyer or as someone who's refinancing, you want that option. Okay. And then I show the rate sheets so that there's no BS. And if someone's saying, oh, we have a free renegotiation, go, cool. Can I see your rate sheet? Just want to make sure. And if they won't show it to you, well, then I think we got that answer, because we all know, like, look, if you're a salesperson, it's a heck of a lot easier to say, I've got a free renegotiation than to say, hey, I can renegotiate, the rate's got to be at least a quarter lower, and there's a 0.375 fee. Sometimes you can work it into the rate, but you're going to get a lower rate if you pay it, but let's go through the math and look at it. That's not as sexy, right? No, that was I have a headache. So you really want to make sure that you're working with a lender that has the ability to renegotiate, because the last thing you want is for the market to come down and you just to be stuck. There's no need to do that. This is just going to be part of your due diligence, right? You're going to want to, make sure the lender you're working with, the individual loan officer, has good reviews. B, you're going to want to make sure you're fully underwritten for that pre-approval. C, you're going to want to make sure that they have the ability to renegotiate. I wouldn't even fill out an application with a lender if they didn't have the ability to renegotiate based on what I'm seeing coming down the market. No way. Why would I? It's like, why do I want to go to a fight with one hand behind my back? I don't. I want both hands. And if someone's going to put a weapon in there, I want my weapon, right? So really important that you guys are mindful of that, because not all lenders offer rate renegotiations. And beyond that, you can have a company that does it, but not all loan officers, A, know how to do it, or B, are willing to take the time, energy, and effort that it takes to do it. Because I'll be honest, it takes time, energy, and effort, right? You're running those scenarios, you're reaching out to the client, you're changing the lock if they want to. If they don't want to, you're running that scenario again. It is more work. And if you guys go, oh, well, Jen, we know you're not just a saint. Look, I do it because it's what I would want if I was buying a house. But also from a business perspective, if I can save you money when you weren't even thinking about it, you're going to refer me to your friends, and you're also going to come back when you refi. So really important, make sure the lender has a rate renegotiation and they know how to use it, right? And questions, comments, reach out. If you guys are already working with a lender and you're like, am I getting ripped off? Call or text me. We're looking at a ton of loan estimates every single day. I'm seeing some that are good, but I'm seeing some that are like horrible, where literally like our team chats are like, oh my God, they're charging this woman $16,000 too much. Like some scary stuff. So please reach out. Once again, we have this new number. It's a team number, so we can get back to you quicker. 786-933-2077. And yes, you can text it as well. Thanks for watching, guys.